Attila Tanner. Welcome to Next Stop. I hope you're all doing well. And it's been 2 weeks since last, and now I have updated some of the formulas for growth and prices stocks. So now we are entering in the price to sales as a factor, and that gives us, I feel, a more accurate representation of what's a price stock and growth stock as well. So in the last 2 weeks, I gathered all the quarterly results of the companies that we are following into the computer program. All the data has then been analyzed, and that information is now ready. So let's get going. We start with the highlights. Airbnb reported their year-over-year sales growth rate was impressive, 78%. My target rate for them is $175, which is where they seem to be trading at the moment. Toyota Motors, they year-over-year had a decline of 14%. My target rate for them is lower compared to where they are trading at the moment. My target rate is 134. Nvidia, for them, the year-over-year sales growth was great, 53%. My target rate for them is lower than compared to where they are trading at the moment, which is $179. For Twitter, year-over-year growth rate was 22%. My target rate for them is $75, which is good upside from current levels. All right, let's look at some more companies that reported. Uber reported their year-over-year sales growth of 83%, which is great. My target rate for them is $96, which is a good upside from current level. Lyft, similar to Uber, had a good year-over-year sales growth of 70%. My target rate for them is $105, which is also a good upside from where we are. Doordash reported year-over-year sales growth of 34%. My target rate for them is $204, which is also more than double in opportunity from current tradings. All right, the Canadian Shopify, shop.to is the Toronto ticker symbol, or the Canadian symbol for Shopify. Year-over-year sales growth of 39%, and my target rate is 707 Canadian dollars. So it's a little bit lower compared to where they are trading at the moment. All right, that completes the highlights. Let's go into the regular reporting. We're going to start with the US market and the value stocks. So in the value stocks, we are looking at high market cap companies with low price to earnings. And we have a big surprise. Meta Platform, formerly known as Facebook, is now the new number one. The price to earnings ratio has dropped. The stock has dropped lately. So now they are in the top spot. The market capitalization is $561 billion with the PE, price to earnings of 15. JP Morgan drops then down to spot number 2, and Bank of America is also down 1 spot to spot number 3. Exxon drops out from the list. All right, let's look at the dividend in the US market. Petro China moves up 1 spot. AT&T drops down to spot number 2, and China Petroleum and Chemical Corporation retains that 3rd spot. All right, let's go into the growth in the US market. Here we have one change. Moderna remains spot number 1. Vroom is number 2. Peleton enters the list as spot number 3. They don't maybe have a strong sales growth, only 6%. However, their stock price has declined 76%, which makes them more attractive for in this list. Previously in the list, C3AI drops out from it. All right, let's look at the pricey ones in the US market. Here we have complete new changes, thanks to that price to sale ratio factor that we have entered. Cloudflare is now the new number 1. Their price to sales ratio they have a price to sales ratio of 56. Sales growth year over year is otherwise 54%, which is great. Stock price has followed it with 74%, but they still make the top spot for Pricey. Datadog is number 2 in Pricey. Their sales growth otherwise is 84%, and stock price has followed it with 81% year over year. But the price to sale ratio is 60, so that's the reason they are on spot number 2. Prologis is number 3. They have a modest growth of 15%, not too bad, but the stock price has going out 72% during that time. And when we factor in also their price to sales of 24, they become spot number 3. Previously in the list, Nokia, HSBC, and Ford, they all drops out from the price list. All right, let's go into the Canadian market and let's look at the value stocks there. Number one is Royalbank, number two, TD Bank, and number three is Bank of Nova Scotia. No changes. Dividends in the Canadian market, some changes. Enbridge moves up one spot, and they had also a reporting done. Pembina Pipeline drops down to spot number 2, and TC Energy remains at spot number 3. The growth stocks in the Canadian market has one change. Lightspeed still remains at spot number 1. Air Canada, who did the reporting, is still number 2. Their year-over-year sales growth has now changed to 230%, which is very impressive, while the stock price during the same time period only gained 7%. Orc Resources is newcomer and spot number 3 after their report. Impressive year-over-year sales growth of 346%. Stock price has also doubled 96% during the same time period. Curaleaf, who was in the list, drops out from this list. Let's look at the pricey ones in the Canadian market. Here we have almost no changes. Show Communication remains at spot number 1. TD Bank moves up to spot number 2. And Loblaw drops down to spot number 3. This completes the reporting for this time around. Thank you so much. If you like the videos, please like and subscribe so you don't miss out on the next one. If you have any comments, please enter them in the comments below and I will try to answer them. Always gather as much information before making investment decision. Thank you so much for watching. Until next time, bye-bye.